Are you tired of debt weighing you down? Debt sucks. Let's talk about if using the equity in your home could help you either pay off debt or consolidate some debt. Or can you even keep track of those monthly payments and what that interest is charging you? I'm Rachel Inman with the Your Smart Mortgage Guide channel, and today we're talking about possibly considering using some equity in your home to pay off debt and help you get debt free. So first, I'm going to tell you a personal story. When my husband and I paid off some debt, we decided to write that debt a goodbye letter because we were sick and tired of it, honestly. So we paid off that debt, and along with that last check over to that payment, we wrote a letter, and it was an FU letter to that debt, and we said never again will we go into debt. And when we wrote that letter, we even put a stamp on it and stuck it in the mailbox, and the next day I threw it away. But it was a great exercise to say, we're done, we're never doing this again, and good riddance. So first, let's talk about the cost of that debt and how much interest you may be paying each month on that debt. Let's say you have a car loan for $25,000 and your payment is $460 per month at an interest rate of 4%. You are probably paying about $45 in interest each month. Then let's add on, let's say you have a personal loan for $15,000 with an interest rate of 12%. Your monthly payment is probably around $330 and you're probably paying about $80 in interest per month. So far, we're paying over $125 in interest charges each month. So now let's add 2 credit cards to our debt cycle. Credit card number 1, it's a balance of $6,000 at an interest rate of 15% with a minimum monthly payment of $135. If you only pay the minimum each month, you never increase the balance, which is unlikely, then it might take you 284 months or 23 years to pay off this debt. Wow. So let's add credit card number 2. Let's say it's a balance of $12,000 at an interest rate of 15% with a minimum monthly payment of $270. If you only pay the minimum each month again and you never increase your balance, which is unlikely, it may take you 353 months or 29 years to pay off this card. Wow, do I have your attention now? Now, there are some other ways to consolidate debt or pay off debt. For example, you could use maybe a bonus from work. You could use family inheritance. You could also even use your tax return if you have a good tax return coming to you to pay off that debt. But if you just cannot get yourself out of that debt cycle and you are strapped for cash, considering to use the equity in your home and do a cash out refinance may be a great option for you. So let's review what that would look like. So let's review an example if you were to do a cash out refinance. Let's say you've owned your home for several years and your home is valued at $450,000. Your remaining principal owed is $300,000. You can find this on your most recent mortgage statement. This means you have $150,000 in equity in your home because we simply take $450,000 minus what you still owe on the home, $300,000, and that totals $150,000 in equity. Now, depending on the type of mortgage product available to you and your current mortgage, your cash out will vary. But for this example, let's use a conventional 80% loan to value. Loan to value means we're going to take what you owe on the home divided by the home appraisal or the home value amount. We're going to keep that at under 80% so that we're not having to pay private mortgage insurance. If you want to learn about private mortgage insurance and loan to value, there's another video on this channel you can check out. So let's take 80% of $450,000. That equals $360,000. This means you can move your loan amount up to $360,000. The difference between the amount you currently owe, $300,000, and the new loan amount of $360,000 is $60,000. So before we determine how much cash out you can get from your home, we need to remember that a refinance does cost money. So in this example, let's say your refinance is $7,000, meaning there's $7,000 in closing costs that we need to pay for. These closing costs include processing and underwriting of the loan, your settlement fees, title search, taxes and recording fees, setting up your new escrow account, and your prepaids. It's important to remember that as your new lender sets up your new escrow account, your current mortgage company, once we close on your new refinance, will actually reimburse you any remaining funds in your current escrow account. So we will use $7,000 to pay for the closing costs. So now we take $60,000, which is your original cash out plan, minus the $7,000 to pay for your closing costs, and that leaves us with $53,000 that we can use for your cash out refinance. All right, so we have $60,000 minus the $7,000 to pay for the closing cost of the refinance. That leaves you with $53,000 to pay off debt. So let's go back to our example of what debt we're gonna pay off with that $53,000. All right, so let's pay off those two credit cards at $6,000 and $12,000. Let's pay off the personal loan at $15,000. And then let's put the rest of it in savings to build our emergency fund and aim for at least 3 months of expenses in that emergency fund. So we would essentially pay off a total of $33,000 in debt and then put the remaining $20,000 into savings, leaving just our car payment to pay monthly in addition to our mortgage. This already saves you $735 a month in those monthly payments that we just paid off. So remember, since we're changing the loan amount, your actual monthly mortgage payment may increase or decrease, but it's totally dependent on what type of loan product you choose, how much money you choose to take out of the loan, and your interest rate, and also the term, how many years you plan to pay this loan off. So you should certainly rely on us at Your Smart Mortgage Guide to help you pick a great long-term loan product that's a great fit for you. If this is all just too overwhelming, then just click my calendar link below to schedule your free home loan consultation today so that we can help you get started and help you pay off that debt and have that freedom. Imagine yourself sitting down at your dining room table writing your debt a goodbye letter. That will feel so freeing and that weight will be lifted off your shoulders. We would love to help you do that, and we would love to serve your family and help you make great financial decisions. YouTube thinks you'll like this video next.